Welcome to my stock scanner and to the monthly video about our 4 strategy algo portfolio. We've been running this portfolio now for 13 months and I thought it was about time to give you an overall overview of how we have performed. Now, if you have followed us for a while, you know that we have tested this back into the year of 2000 and the algos are showing some fantastic results. Today I'm going to show you a bit about it, but the best thing about algos when you are finished testing is to see if it can actually produce the results out in the real life that you expect it to do. So how have we done? Well, first of all, let's have a look at the chart here. And we are comparing ourselves to a benchmark called RSP. RSP is an S&P 500 ETF, but as it says here, all the stocks are equal weight, meaning that each of the 500 stocks has a 1/500 part weight. Now, in a normal S&P 500, we have 7, 8, 10 stocks that carries the entire index, and we thought it was a bit more fair to everyone that we use the RSP. And going back to the year 2000, or at least as long back as we have the RSP, we can see that it actually outperforms S&P 500 over time. So that is our benchmark. What we can see here is that we started our portfolio, or a mix of 4 strategies portfolio, we started that back here on the 1st of January 2024. So that is 13 months ago. In that time, our 4 strategies in combination have made 25.5% in performance. That is compared to the market, the RSP, that is up 17%. I should say these are the numbers from last night I'm using here. Also, you can see that since New Year, we can look at that here on the daily. Since New Year, we have performed 4.1% in the roughly 5 weeks that have gone since we started after New Year, and the market is up just about 3%. So we continue the outperformance. Now, we're not going to outperform every month and not even every year. We can see that in our back test, but let's have a quick look inside my stock scanner. In here, you can see we have a US algorithmic and an EU algorithmic strategies. Now, the EU is the test we are running right now because we don't have reliable data back to 2000 for all the stocks in EU. So this is just a live test and we are not encouraging anyone to seriously look at that except for a test purpose. But down here, we have the US portfolios. And as you can see, year to date, they are varying a lot. 6.6% for the quality momentum. The TPI is a negative, so is the value quality, and we have the value momentum at a 10.3. Now, if you have been with us for a while, you know these quality momentum and so on, these scores. These are our stock scores, and we are building our algos on them, meaning that the quality momentum strategy is focused on finding the best quality and momentum stocks. And that is great sometimes, and apparently so far this year. But the TPI that is looking for quality stocks that have been in a bit of a dip, they have not done particularly well this year so far. The value momentum is actually bad value, low value, and high momentum, meaning we are looking for stocks that are not priced especially well, and then with a lot of momentum in them. That has done fantastically this year and also last year. And the value quality also is a bit of a bad performance so far this year. But that is a perfect example of why we are combining 4 strategies. Because we know that not one strategy will always perform best in all markets. We can see it here as well. We can see a total return. These are the last 13 months. 22%, 27%, 40%, and 12%. If we look into our back tests here back from year 2000, you can see quality momentum, value momentum, and TPI plus. You can see there are years where, for instance, one strategy makes 17%, another almost -3%. We have a year here where 2 of the strategies are above 60%, and one is quote-unquote only 24%, and so on and so forth. Then the ones underperforming here, we can see that that one is making 25% here, another is only making 4%. So every year we have strategies that outperforms and that underperforms, and that gives us a lot more of a stable development in our portfolios. Now, if you're a member, you can always go in here and you can have a look at it. We only trade once per month, meaning that we don't trade with emotions. We don't consider trade wars or presidents or real wars or whatever comes along. We just trade once per month. As you can see here, if you choose all 4 strategies with 25% in each of them, you can see that you will have a total of 43 stocks with different weightings and so on. And well, once per month, we just look in here, we trade what it tells us to allocate, and then we just wait a month. That's it. That's how easy. We can see that over the last 25 years, this strategy has outperformed the market. So far, in the 13 month of live test where we have traded it openly with our members with our own money, it has done just as well as we expected. So if you're interested in joining us, you can always get a 30-day free trial of the platform. I'll put a link in the text below here under the YouTube video. And otherwise, I will just talk to you again in about a month about the portfolios. And of course, before that, about everything else about finance. So for now, bye.